traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So it's time to get started. Let's go ahead and do that. And we're going to start with the euro dollar as we normally do. And let's get to the charts. By the way, yesterday I drew a bunch of stuff on the charts and I lost a lot of the drawings yesterday. So you might see some of the drawings that I had from yesterday that I removed back. Because when I lost internet at some point, and when I lost internet, like towards the end of, I think it was at the end of the Morning Edge, you know, I had to get it when it shut off. It didn't save all my drawings, so a lot of the stuff that I drew, just like I said, it didn't come back. Anyway, so let's and the euro would be a prime example of this. So we have the support that we were writing down yesterday at 110.90. Do you remember we wrote down 110.90 as support? If you take this low here to the high, okay, not that one actually, it was this one right here. We broke the 786 yesterday when we broke through that 111.70, and then we wrote down that and then we had like 111.70, and then 110.90 would be more support. Which if we came through that, you know, through that low, we might test the 110.90 level. Well, those stops below 111 were saved. So that's where we came to 111, plenty of bids around there, and that has stalled the overnight lows. Now, we were rallying back, but we should find some resistance, even if Mario Draghi is relatively hawkish, okay, and less dovish than the market expects. I think the rallies are going to be limited to whatever this trend line takes us to. So, you know, and this will depend on, you know, how much of an extension we get, you know, whether we extend back up towards this previous support here, or, you know, we could extend all the way up towards, you know, maybe 112.50. But I would say our first stop, which is going to be significant, if we do, let's just make the assumption that the euro is going to continue to claw its way back. Okay, it's going to be right here. All right, that comes in at 112.15. So that's going to be really good resistance today. Okay, 112.15. Support is still 110.90. Now I know, you know, you're like, well 111 is, you know, it held us overnight, but you just imagine that stops get taken out below 111, and then we just hit the horizontal support that comes right through here. Now you know, the real downside would be if we broke through this 110.90. I mean, then that really opens up the door back to 110. Now, Mario Draghi is real, you know, he's talking in Brussels about monetary policy. That's why it's such a big deal today. It's not like he's making some opening statements for a luncheon. He's actually talking about monetary policy in Brussels, in Belgium. So he's, you know, he has the potential of saying, hey, you know, we're actually exploring the idea of expanding quantitative easing, something like that, and we could sell off all the way to 110 today. I mean, that is the risk. I don't know if that's going to happen. I think the ECB will eventually do that. I just don't know if that's going to be their intention today. I mean, you have to also take into consideration that every central bank that has done quantitative easing has expanded their asset buying at some point. You know, so the ECB, you know, dealing with the periphery, dealing with now a large German manufacturer crisis, dealing with a slowdown in Germany. You know, perhaps that's the route that they take. I don't know if it's going to be announced today, but, you know, somewhere down the road. So anyway, for right now, 110.90 is a big deal. Obviously later in the lunch money webinar, if Mario Draghi is super bearish, excuse me, if he is super dovish, we may be looking at the 110 level later. But I'm like I said, I have no euro exposure right now. I'm not comfortable being on the long side of the euro. I'm not comfortable being at the short side after such a big drop either. All right, so the way that you could play it is from here, because notice we're mid-range as we normally get just before a big event. A rally up to here would be probably a good short. A sell off to 111 might not be a bad place to be long. All right, and we are pretty much mid-range at this point. All right, let's go to the cable. Now the cable is, it's bearish, but we're coming into some support here, and we never rallied back yesterday. I was thinking, we might get a rally back. If they did, I would have loved to short the cable higher. The cable just continued to bleed lower. If you look at the daily chart here, still very, very messy. Okay, let's remove that. Remove that. We're going to keep those fib levels, because if you go to a 4-hour chart, okay, we have 127% extension that comes in at 152.40. We have a 786 retracement of this entire move that comes in at 52.70. So we have 52.70, 52.40. I'm assuming this 52.75 is going to offer us some pretty good support. So even if we push one more low, I'm real tempted to get long. I'm already long pound on some crosses, the pound Aussie and pound New Zealand, and I'm tempted to get long the pound on, maybe shorting the euro pound perhaps would not be a bad trade right now. I'm not doing it at the moment, but maybe long some pound Canadian if it's a weak Canadian retail sales number. But I think the cable is going to find some support down here. So 152.75 I think is going to be support for today. Well, I'm going to write down two levels. 152.40, 152.75. Okay, is support. Resistance on rallies. Let's figure out where that's at. Because we can't make the assumption that this is the low. Like this is, because we could go lower. So hold on really quick. Let me see something. Man, this euro pound is really stretching, isn't it? I'm going to get short some. Played it on the long side. I'm going to play it on the short side. It got short at 72.99. I don't. This is getting a little overbought here in the euro pound. It might stretch its legs just a little further north, but I'm shorting a little bit of euro pound here. We got some congestion coming up ahead of Mario Draghi. I'll see if I can short some here and try to get out of it as it comes back into the 80s. So anyway, all right, going back to the cable. So where's resistance going to be in the pound? So we're at 153. If we can make it back to 154, we have to imagine by the time we get all the way up here, that's going to be pretty stiff resistance if we can make it all the way up there. So 154, that'll be resistance. Whoops, hold on, I forgot to put in our biases. Whoop. All right. Equities are rolling over a little bit here. Hold on really fast. Hmm. Okay. I'm not going to do anything right now. Like I said, I shorted some euro pound. That's fine at this moment. Okay, let's go over to the Swissy. So here's the Swissy. I'd actually like to buy the Swissy on a bit of a pullback here. If we can, you can see all the stuff that I had from yesterday is still here. So I got to remove all this stuff. It didn't save when I lost internet connection yesterday. Okay. See, on the Swissy, if we can pull back to 97 cents, be a buyer here. Because that's obviously a high now. Because that would be a pretty feeble pullback. Um, See, a 38% retracement would be at 96.80, but you notice this 97 cents, there's a lot of support over here. I'd say if we get down to 97 cents, it's going to be a pretty good level to be on the long side, frankly. Okay. And maybe even 96.85 if we can get down there. Resistance. Okay, hold on really fast. That's capping us. So that's very key at this moment. 97.85. That's important. Key resistance. All right, let's go on to the yen. So here's the yen. Let's imagine the stock market continues to claw its way back. Mario Draghi says, oh, I'm willing to do a whole boatload of, not buttload, a boatload of quantitative easing. We make it up to 120.80. I want to get on the short side of that one. Now, if you don't know why the dollar yen's bearish, it's just because if you look over at the daily chart, that breakdown, it's still bearish. Now, here is the this looks pretty symmetrical at the moment. It looks something like that, give or take. So it's bearish, but we're just in this pennant. But it's bearish, I think, because of this sell-off. We're just consolidating before our next leg lower. It's just a matter of time, in my opinion. Just a matter of time. support for right now in the dollar yen. I mean, we're very well supported through here because you can see, even though I've got this trend line coming through, look at this support and look at the wicks and notice how all these wicks, they close right back above. Okay, so that comes in around 119.70. Big support for the dollar yen, even if we go through it. Okay, let's go over to the Canadian. Now, we do have Canadian retail sales coming up. All right. So let's delete. I don't want to delete everything. We did get rid of these yesterday. I remember that. Okay. It's a real tough. I mean, it's a real tough chart to read. As it was yesterday, it still is right now. I mean, I could give you an hourly. You know, I mean, look how crazy these moves are. So that spike low comes in at 132.20. Maybe it's 132.18, but 132.20, 133. I mean, that's kind of like our range right now, but it's not a good range. 132.20, 133. We might break out today. I mean, here's what I'm waiting for as far as Canada goes. I mean, Canada retail sales are expected to come in at 0.4%, on core retail sales at 0.5%, but I'm expecting Canadian data, and I have been for the last month. I've been expecting Canadian data to start deteriorating. Um, so I don't know if their consumer data is going to start deteriorating now, but we're probably on the cusp of starting to see some pretty um, weak Canadian data. But I know I've been saying that for like the last month. But if retail sales disappoint, if retail sales, let's say this is the number that comes in, and we all go, wow, Canadian retail consumers have really just kind of shut their wallets. We could be back above 133 and challenging all this resistance up here. So anyway, all right. Um, let's go over to the Kiwi really quick. Okay, so the Kiwi, I mean, wow, look at this support held. This yellow trend line, it's coming in around 164. I know that's like our big resistance moving forward. Support is 62.40, obviously. Um, yeah, this Kiwi strong. Um, whether or not we hold here or hold here, but I I would give it up to 63.30. That's a 38% retracement. I might actually get on the short side of the Kiwi up there. So 0.6330 if we can get it. I think that's going to be pretty key resistance. We are still in a bearish trend, and while we are below that yellow trend line right here, it's a bearish trend. Okay, period. We're trying to create a double bottom, but we could have you could have argued with me for the last 2 months saying that you found a nice bottoming formation in the Kiwi, and it's never played out, right? I had so many people saying, oh, it's an inverted head and shoulder pattern. Oh, we got a double bottom. Oh, that's divergent relative strength. Oh, blah, blah, blah. Oh, blah, blah, blah. Oh, blah, blah, blah. For the last 2 months, and the Kiwi continues to forge new lows, right? Did we create did we match low? Maybe give us a double bottom. Is it yeah, it's support for right now. We could very easily here in the, let me go ahead and grab the pen. We could very easily be developing another bearish wedge, just like we have been doing, whoops, I didn't mean to make that round. What I meant to make it is we could be, making another wedge formation that eventually breaks down just like the previous formation. So, don't get all hung up on a double bottom, but I will say that support is holding for now. Okay. Let's see. Support 62.40. Obviously, critical support. Okay, when I come back, we'll do the Aussie and the dollar index, and don't go anywhere. Be right back. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So we're going to finish up with the Aussie and, some of these other pairs and look at the dollar index really quick. So, all right, so here's the Aussie dollar. Now, we had marked up as support. Let me remove a couple of these things really quick. I have to figure out what all these are drawn from. Those are all those monthly fibs that I think we need to get rid of for now. Just because we're past that confluence, if you will. I just want them out of the way for a moment. So, as far as the Aussie goes, so we had written down 70.50 as support yesterday. Okay, we're there right now. Now, if you take the low to the high, okay, 70.50 was also the 618. So we broke through it yesterday, and that was due to China. Really, China plowed us through that support last night. We held it yesterday early on. You can see here, we held that 70.50, bounced, and then obviously the Chinese data pushed us lower. Now, where we fell, I mean, there's really no rhyme or reason, but here's the problem with the Aussie that I see. Is that we're back testing the broken trend line right now, which is obviously a little bit of a problem. But let me give you the buts. Okay. Now, if the Aussie takes out these highs, so this high right here at 71 cents, we're going to get a little bit of a squeeze. Okay. If we can break above there. It's questionable. I don't know if I'd go as far to believe that that's going to happen just yet. But, give you the buts. But if we take out 71 cents, we should start squeezing back towards 72 cents. Could that happen? Sure. Why would it happen? I'm really not too sure. I mean, I'm looking at equities; they're already starting to look heavy again. Um, I'm not expecting a hawkish, draggy to drag down the dollar across the board. So, you know, I don't know where resistance is going to be. 71 cents is going to be. I mean, I don't know. I don't know what's going to push it higher. Is what I'm trying to say. It's a hard call. Let me try something else really quick. So we plowed right through these fibs. Saw a lot of people trying to get long the Aussie at 70.50 yesterday, and maybe they made some money, but I don't know. So anyway, 71 cents. We have to get above that. That's just key. I still believe that we're in a range, but obviously we have to be careful of more downside thanks to that China news. Support 70.20. Right now, like I look at the Aussie dollar and I can't. I don't want anything to do with it. You know, Looking at it, it's like I don't want to be long. I don't want to be short. I don't. I'm not really too comfortable with anything regarding the Aussie at the moment. Okay, let's go over to the dollar index. Okay, so here's the dollar index, and the high to low, the 618 capped us on this rally. It's capping us right now at 96. What is that? 96.60. What's the high there? 96.60. Really critical resistance. Now I'm going to say this, and I'm going to just say it right now. If we break that 96.60, you do not want to be short the dollar. Plain and simple. You don't. Because if we break that 96.60, we're going to test the upper end of this flag really fast, in my opinion. Okay. So there's a lot of error right here. You guys see it? From here to here, that's a lot of error. So if we break that, I mean, we're going to go right up here. And like I said, you don't want to be short the dollar if that happens. So in other words, if the euro breaks through 110.90, you don't want to be on the long side of the euro. Okay. And is that possible? Hell yeah, it's possible. You got Draghi speaking today. What if Draghi's like full on QE dovish talk? I mean, we could very easily see the dollar index rip up there. So 96.60, big deal today. Resistance 96.60, big deal for the dollar index. We're in a range. Yes, we are. But I'm just saying, now if the dollar index can pull back down towards over the course of the next couple of days, I don't think we're going to get down here to 95.50, but that's previous high right there was at 96. I'm sorry. Is 95.97. So 96. That should offer some support today because that's the previous high from 2 days ago. That was the peak that we made as we were breaking out of this downtrend line. So that comes in at 96. So any dip towards 96 should be somewhat supported there. All right, let's go take a look at the Let's go look at the peso really quick. I haven't looked at any of these this morning, so here's the peso. Wow, man. That was a hell of a rally, huh? Once we broke that blue trend line, right back to 17. Jesus. It's big resistance. You know, for those of you guys that are, if you're bearish to the dollar, you can trade the peso, you can short the peso with stops above 17. I mean, you know, that's obviously an idea. I don't think I would do it, but if you are a dollar bearer, hold on really quick. Yeah, I don't know. I don't think there's a whole lot to do with the peso right now. Let's take a look at the Norwegian krona. Great reaction off of support, right back into the range. Nothing to do there. Swedish krona. Well, that's a tight consolidation, huh? That looks like to be at a 38% retracement too, if I'm not mistaken. That's a 50% retracement from there, but no, it's a 38% retracement. It's stalling us. Yeah, I don't think there's a whole lot to do here either. I mean, if you're trading the Swedish krona, I mean, perhaps you got a possible breakout, upside, downside. Notice that we're hovering, we're like on both sides of the 38% retracement equally. So, a break above here, a break below there should offer a little, tight range breakout. It's possible. Okay. So I'm just going to leave the bias chart like it is right here. Now let's go into some questions this morning. So going back to earlier questions, Patrick G